Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us to talk all things markets this week is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, we have plenty to talk about when it comes to cattle, and that'll be a little bit of our emphasis this week. But before we get going, let's recap what happened this week in the markets.
If we start on the cattle side of the equation this week, live cash cattle prices were down about $1.60 for the week. And those feeder cattle markets were steady to $4 lower this week. On the future side of the equation, the August live cattle futures contract closed down 90 cents, and the August feeder cattle futures contract closed down $1.80. On the beef side of the equation, we were lower on the choice box beef price, down about $1.50 for the week, with really weakness across the board, with the exception of the brisket being up this week. On the hog side, so stronger hog prices this week. Barrel and gilt cash prices were up nearly $2.75 for the week. That August lean hog futures contract closed up $3.35 this week. We also got a nice increase in the pork cutout value this week, up a little more than $3.60 on the week, led by stronger hams and bellies this week.
Way to go to support the BLT season.
Absolutely.
I do have a question. As we take a look at that, we saw a better or a more improved export sales report from the USDA. We didn't see necessarily any sales going into China, but we saw some jumps in some other areas, specifically, I think about Mexico. Is that kind of a boost that the market needed a little bit to move itself higher as we take a look at those pork values this week?
I think so. I think that movement to the south was certainly some welcome news when we'd really been going along waiting for hopefully better exports, maybe to China. And although those didn't materialize yet, certainly seeing Mexico back in the market, I think, number one, helped hams a lot this week in terms of those ham prices. So I think we're going to continue to see the hog market focused on exports, and that's going to be critical as we go through the latter part of 2019 here. But certainly some help this week with what we saw in that Mexican trade.
Before we get into today's reports, let's talk a little bit about consumer sentiment. As we take a look at those numbers, how does this set us up as we look at supplies for and demand domestically for beef and meat products?
Yeah, so I think when we look at what we got in consumer sentiment, we have to continue to be reasonably happy in terms of what it probably means for meat demand. The numbers that we got out for July suggest a 0.2% increase in that overall index of consumer sentiment. So moving in the right direction. When you look at the different pieces of that current economics condition was actually down 0.7%, while the index of expectations actually rose 0.9%. But all in all, I look at what we got in terms of consumer sentiment, and I go, no real yellow flags being raised at this point. You know, despite we would have had some conversations maybe a month or two ago about a slowdown in the economy. When we look at these reports, we continue to see it's no big issues seem to be cropping up as we look ahead.
All right, let's get into the big reports of the day. Cattle on feed report came out today, and maybe it's okay that there's not really a lot of excitement as it relates to those numbers in that report.
Yes, I'll say those folks making those pre-report guesses did exceptionally well when we look at this week's cattle on feed report. They pegged two of the three, and only placements in June where the average pre-report estimate came in at 97.9. USDA today reported 97.7. So more cattle on feed as of July 1, up 101.8. Placing fewer cattle in June out of the report to me suggests, yes, we've got larger supplies of cattle to deal with here in the short run, but maybe we're beginning to see the trend of what will be reduced beef supplies as we get into 2020.
And not only reduced beef supplies as we get into 2020, are we starting to maybe indicate that the growth in our cow herd might be slowing?
Yeah, so we got a little bit of heifer information out of this report that also, to me, suggests we've got a possibility for fewer beef cows as we look into 2020. That July 1 on-feed number suggested nearly 39% of the on-feed number was heifers. That's the highest we've been in quite a while. I remind us since '96 that average heifer percentage came in at nearly 37%. So 2 points above that average over the '96 forward period. Yet when you look at 2014 to 2017, we're actually 5 percentage points above that period. So a very different situation than where we've been recently. I think from a heifer retention standpoint, it suggests to me we're doing a lot to slow down the growth in the herd. I'm not calling for a huge decline given what I see, but things are pointing for fewer beef cows.
And we'll talk a little bit more about what that means here in a minute. I want to get into the cattle inventory report. As we take a look at those numbers, remind us again what that cattle inventory report takes a look at and how many times a year we see it.
Yeah, so we've been on again, off again with a July inventory report in terms of what USDA has been doing, and budgetary issues have in the past made USDA not do one of those reports. But we're now seeing at least two consecutive here that we can talk about. It's kind of our mid-year estimate of where we see overall inventories. It's a good opportunity to again talk about, are we growing cattle inventory? Are we reducing cattle inventory? So what we really got out of this report today, all cattle and calves July 1 basically unchanged relative to a year ago. If you look at beef cows, also basically unchanged relative to a year ago. So getting some confirmation in that beef cow July 1 estimate that we are slowing down, and maybe by the time we get to next January, we'll be turned down. If you look at beef cow replacements, we were seeing out of that report down 4.3% relative to a year ago. Again, I think that confirms what we saw cattle on feed wise as well. Calf crop. All right, so calf crop, according to USDA, was down 0.3%. If you looked at the pre-report estimates, on average, they were up 0.5%. So less of a calf crop than a year ago. To me, again, continues to point to maybe lower beef supplies when we roll into 2020.
As we get into 2020 and we take a look and take this information into consideration, does this set us up to a better price situation potentially on the beef side of things as we get into later 2019 and on into 2020?
So I think a couple things at play when we talk about these price expectations. So number one, I like the fact that we're slowing down the growth in beef supplies and could actually talk about lower supplies in 2020. I think that's helpful to things like fed cattle prices, and could in fact get us higher prices as we look into 2020. I guess, Megan, I continue to get worried about where corn prices go for the remainder of this year. I'm curious to see what we get from USDA in terms of an August report, in terms of acres of corn planted, and I don't think we'll get a lot of new yield information given they're not going to do their first yield survey until September. But if we were to trim the current corn crop substantially, or USDA was, and we continue to run corn prices much higher than where they've been, I think that could hurt feeder cattle prices late in this year. And maybe this is an opportunity for some price risk management for cow-calf producers. They don't traditionally do much price risk management, but I do worry there's downside risk as we finish out 2019 for many of them. And some of the things that we see from USDA in terms of modifications to the LRP program might give us some opportunities for cheaper price risk protection than they've seen for a while.
And that's definitely something I'm assuming producers are going to want to maybe have a little certainty in, knowing how volatile the corn and soybean markets are going to be with the late planting season, the trade situation, and how all of those things have to balance each other out.
Yeah, absolutely. I keep saying I want them to protect the downside. Things like LRP or an options contract could do that. I don't want to give up the upside possibility, though, as well. So I say I want them to be careful about how they're doing risk management, but I do think there's more downside risk, especially if these crops start to get shorter as we get further into the growing season.
One final quick question about the cattle inventory. Were you surprised to see that dairy herd number drop a little over 1% from a year ago?
No, not too much in terms of what we saw on the dairy side. It's just been such a tough ride for the dairy industry the last 3 years or so. And I think 2018 caught up with a lot of folks, and we are finally starting to see some overall reduction in dairy cow numbers. Milk prices have been moving higher, and so I might suggest that we're not going to continue to see the kinds of declines in milk cows that maybe we've seen in this report. I'm not saying we're going to stop that decline, but maybe not quite the same decline of what was 1.1% out of this report will continue as we go forward. I will say from a beef perspective, we're seeing a lot more beef genetics used on dairy. And if that continues to play out, even though we have fewer dairy cows, having offspring from those dairy cows that compete better in beef markets might be something that beef producers want to be paying attention to.
All right, Scott, what do we have next week in terms of reports?
Next week, we'll out of the gate get a cold storage report, and then towards the end of the week, we'll talk about livestock slaughter.
All right, we will talk to you next Friday. Have a great week.
You do the same.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner for Brownfield.